All right, now we are live. Yes, I'm going to be holding up my copy as well. We have Chris Whalen, CPA here. He can do your taxes and answer various tax questions. There are various links in the descriptions to some of his sites, his official website. I think you're on Twitter, BitChute, Gab, Minds. You have several books out, one of which is this, and we will be talking about that briefly. How are you doing today, Chris?
I'm heavily and deeply entrenched in tax season right now, but doing very well.
Yeah, it's amazing you could spare any time to actually do a live stream. Probably you might. How many clients, by the way, do you have on average in a day?
I probably see 8 clients a day, 6 days a week, let's say, in a very busy tax time.
Oh man. So first, I figured we would get a little bit into your book because, and for those of you that don't know, which is all of you, I actually met with Chris Whalen in person recently, and he very kindly supplied me with a copy of his new book. So why don't you go a little bit into that first and foremost before we get into taxes themselves?
Sure, thanks. Well, I have a lot of experience, many decades of business experience, and I finally took some time the past 2 years and wrote down all of my tips for every entrepreneur or salesperson that you might have in your life. If you own a business, the name of the book is Be the Chocolate Milk. And it's a funny title, but it really means, especially someone who's in an homogenous market like me. I'm a CPA. Everyone thinks all tax people are the same. And so instead of just being a gallon of whole milk with a red cap in the dairy case, you want to be that little quart of chocolate milk. And if people can get the chocolate milk, they'll never go back to the regular milk. So it's my top topics or hints for you to differentiate yourself in homogenous markets, technically.
Which is definitely something that creators, content creators online, I know this has nothing to do with taxes, probably do need to read that or something akin to it, because that's definitely important with regards to branding your own brand. If you're an independent content creator, there has to be something unique about you. I've noticed people trying to replicate others, but adding nothing new to what they're doing, have more difficulty actually growing their brands.
Everybody does. And it's very easy to become the main part of your brand. And once you do, you'll see your sales increase. You'll see your customer satisfaction. Listen, if I sold toner cartridges, I have to find a way to become something better than my next door neighbor toner cartridge salesman. And that's what this book is about. It tries to give you every possible thing and method I've used and devised and tested for 30 years to bring that to my world as a CPA. Why am I different? Why do you want to pay me instead of somebody else to do your work?
Because you have Tootsie Rolls instead of just lollipops on your desk in your office.
That's right. It's all about the chocolate.
It's very important. It's extremely important. Now, first and foremost, and this is something that we had talked about prior. In fact, I think the last time we streamed together last year, actually, you had brought this up in a preliminary fashion. The new IRS rules regarding deductions for those of us who our income comes at least partially from self-employment. You had mentioned that there was a substantial reduction in taxation potentially for those people. And I thought we'd go into that first because that's something that personally affects me. It affects, like, when I file my taxes, that's going to be something that actually affects the amount that I owe the government.
Right. Well, one of the main things that Trump had done, if everyone recalls, he reduced the corporate tax rate. So some people were up in arms about that. We're giving corporations big tax breaks again. But of course, it was good to bring us in line with more of the world rates. We had fallen behind in corporate tax rates. We were too high. But at the same time, he wanted to give people at our level, I'm a small business too, a break also and give us a corporate tax cut. And it's really a significant thing, and it's really helping a lot of people. So if I can switch to my slide, would that be okay?
Absolutely.
Okay, so I prepared a slide.
And I'm gonna mute myself when you're speaking at length here, so that there's no feedback as well.
Okay, so you know. Hope you can see my little spreadsheet on the screen. Okay, great.
Yes.
Okay, all right. So first of all, what we have now is something called qualified business income. And if you're a small business like me and Sticks are, well, that would mean, let's say you're a Schedule C. A lot of you who are self-employed know that if you're a sole proprietor or a single member LLC, you will file your taxes on a Schedule C for the most part. And so in my example, I have someone earning $100,000 net income from their business. Very simple to understand. And what Trump said is, okay, up to certain income limits, we can take 20% off of that number before we calculate your tax. It's really that simple in this case. So take a look at your screen. I have $100,000 of income. I take 20% off for this qualified business deduction. I also have a standard deduction in 2018 of $12,000 as a single person with no children. So my taxable income comes down to $68,000. Okay. Now the tax on that is calculated to $10,899 as we see. And we stop there for a second. I want everyone to remember, when you're self-employed, for those of us not self-employed listening right now, if you're self-employed, you have to pay all of the FICA that usually is deducted on your W-2 when you're an employee. So in this case, I have $100,000 of self-employment taxable income also, and the self-employment tax on that, it's approximately 15.3%. So our total taxes that we pay, where we see, are $26,199. Very easy to understand. Very important point here for my business owners who are listening, that the qualified business deduction does not apply to the self-employment tax. So this is a mistake I'm seeing already. So yes, remember, you're paying ordinary tax with $20,000 reduced because of this deduction, but your self-employment tax is still based on your full net income of $100,000. Sticks, is that pretty clear?
Yes, absolutely.
All right, great. So now we're going to move on to what I wanted to do is compare this now to 2017. So this is pre-Trump tax law. What would you have looked like? Same exact scenario, same exact income, but what would your net tax have been? So we're still seeing a single person with no children. And if you see, I've expanded this spreadsheet to now include 2017. So let's take a look at that. 2017, we did not have the 20% qualified business deduction. So that's zero. We have a standard deduction and exemption of $10,400 then. It's bringing our taxable income to $89,600 in the 2017 column. So let's take a look. The tax on that was $18,139. Look at that compared to the $10,899 in 2018. Now, just like I said, your self-employment tax is still the same. It's not, there's no reduction. So look, the self-employment tax is still $15,300. So our total taxes now in 2017 would have been $33,439. So in 2018, everything else being equal, you would have saved $7,240, or 21.65% on the net tax bill for the year.
And I think most people, they don't seem to understand that that's how significant that is, because I think a lot of the politicians, they're way outside of those brackets and make close to like 10 million a year. So that could have something to do with why our tax code's a little screwy.
And a very important thing to remember, and I'm a nonpartisan person, is that yes, everyone's getting a tax break in some way, even people that make a lot of money. But as a percentage of your taxes, the lower income that you get, the greater your savings, right? So like I could have someone making $100,000 with the new plan in tax, as you see, that they can save this much money. But someone who makes $1 million is relatively going to not save that much tax. So it's important to remember that people say, oh, the rich are getting a break. Well, everyone has gotten a break, and that's good. But the lower income you get, the greater that it's skewed towards a greater percentage tax savings than it was in the prior year.
It's funny how some people still oppose that, and they don't seem to understand that money will go right back into the economy.
Yes, I don't know a lot of wealthy people that are my clients that are hoarding money. You know, they're entrepreneurs. They're taking every dollar that they can. They want to reinvest. They're creating so many jobs with the money they're saving. I can honestly attest to that. And I ask people, listen, when it comes to this kind of stuff, middle income, higher income businesses, and what's happening with the tax code, you really should ask me. You know, I don't ask me about North Korea necessarily, or what's happening with this Twitter feed. But when it comes to this, I really know what's happened. So fact-based, people should call me and say, Chris, what do you think about the law and what's happening in certain circumstances? Is it fair? Is it unfair? I can sort of answer that question based on facts. You
mean you don't want to weigh in on the state of Paraguay? By the way, I did want to ask you this. This is one thing that I wanted to ask that I hadn't thought of before. What economic changes have you seen in your area, like actually on the ground? Because like I'm living here in the Rutland area, from the Great Recession to now, it's like, you know, night and day, honestly, economically speaking. Especially in the last few years, there has been some expansion of business, you know, post-Trump, essentially. It took us a long time to recover, but, you know, we went from maybe a quarter of all properties being foreclosed to now it's pretty stable. I'm wondering if you've
Wow.
seen similar things there.
Well, for a long time, I like to keep an entrepreneurial confidence index, if you will. You know, it's my feeling on the street. Like it gauges things like, oh, my small contractors, plumbers, electricians, how many weeks or months are they planned out for work? That's a good indicator, right? If someone has 3 months worth of work, healthy economy. So since the election in 2016, I've just seen a boost of that from in every area of my world here at work. That I've never had more meetings with people looking to start a business, and these are people of color too. This is the big thing that I've never had more meetings with a more diverse group of people. It's helping everybody. So yeah, so I've seen nothing but extreme confidence, unemployment all over the country, but in New Jersey, in my areas, it's unbelievably low. Wages are increasing. I have clients who are talking to me about the fact that, hey, minimum wage doesn't cut it. They look, you know, that labor is short. There's a shortage. It's perfect. And so we're talking about lower income people's wages are naturally coming up the way it's supposed to be. Because when we have too much labor in the country for whatever reason, of course, the price goes down for it.
So you've never seen an economic boom like this?
No, not in the small to medium sized street level that I deal with, never. And also the banks also have come on board where lending, underwriters are not always the nicest people. Everyone dealt with a loan ever, but even commercial underwriting and underwriting for mortgages has opened up more. Years ago, there was a lot of self-employed person mortgage kind of deals. Oh, no assets, you know, what's your income? And that went away for a while, but there's more and more companies now seeing this boom from the lower level, small income, small business. They're now starting to lend even more to small businesses because they have a lot of confidence in that the boom's going to continue. So even from lending, it's loosened up to further help this steamrolling effect of, well, the more commercial credit I have, the more that I can expand, the more jobs I can have.
Yeah, so they can make more and more money over time by reinvesting. One thing, I have to make a quick aside in chat, several people mentioning super chats. I don't take them because I believe that everyone should be able to weigh in the same with regards to chat. I also, Google takes like 30–40% of the super chat money. So I don't use them, actually, just as an aside to people.
And if they have a question for me, they can go to the link in the description. I have a nice button right on the main webpage. Ask me a tax question. I'd more than happy once I'm off. I'll definitely respond to anybody that's listening.
Yeah, there are links in the description as well as to his Twitter, Gab, Minds, BitChute, and other sites as well, and his books also on do you release through Amazon, correct?
Yes, sir.
Yeah. So no surprise there. It's the best thing. POD is the best thing ever for authoring things. You wanted to as well speak about SALT deductions because you said there were some misconceptions with regards to them as well.
Yeah, so the SALT deductions refer to state and local tax deductions. So those are taxes you pay to the government, state income taxes such as New Jersey, but it's also your property taxes that you pay. So the rules are that you can only take up to 10,000 of those combined. Now, a lot of us don't have that much in taxes, either state or property taxes, but this really affected high tax states, supposedly California, New York, New Jersey. They have very high income taxes and very high property taxes. Many of my clients will be phased out. So they're only going to get $10,000. Now, the media jumped on that to say, okay, if someone had $20,000 in 2017, right, of these deductions, and now they only get 10,000 of them, oh, this is a disaster. And of course, this is going to increase your taxes tremendously. Now, in a vacuum, yes. If I take $10,000, if I add $10,000 to your taxable income, we're going to have an increase in tax. But that's only a very small part of the picture, the tax picture. So let me just expand a little bit in that. Not only that's a change that seems negative, but let's talk about our tax system, right? We have a tiered tax system. Everyone understands you start at 0%. You can go up to 15% to simplify, 20, 30, 40%. And as you make more money, more of that income is taxed at a higher rate progressively, as you hear. So let's imagine that from 2017 to 18, that all of those rates, let's say we have 6 rates in a row, that they're all reduced by 3%. So wait a second, I could have the same taxable income, but I'm going to pay less tax, just like we talked about with that SALT deduction issue. So that's something to look at. I could lose 10,000 in deductions, but wait, my actual tax rates I'm paying is going down. So doesn't that also, could that offset that? Many times it does. The other thing is that the margin. So when you move to those higher tiers, so when I go from 0 to 10%, then the 15%, it takes me longer to get there. So not only are my rates lower, but the amount of time that my income is taxed at those rates is longer. So I have people who have lost $30,000 of itemized deductions that are still break even or still doing okay with the tax code. I don't have any, with regard to the SALT deductions, I don't have anybody who's dramatically hurt by it. And I have some pretty high net worth clients in this part of New Jersey and New York. And so it's very important to look at the entire tax code changes as it relates to your, like, to bring up the point, why is this important? Because people in high tax states are nervous that losing this deduction is going to decrease the value of their home. And because they think that this deduction is intrinsic to the value. But if you look at the overall tax code, what is your after-tax income from these changes, the good ones? And most people have more money after tax than before. So their ability to buy a house, to keep a house, and maintain their mortgage is stable or better.
So there was no fiscal Armageddon, as Krugman and CNN and the New York Times claimed.
No, again, because they rarely show numbers. I mean, that's what Krugman, he's a very famous person, maybe Harvard educated. We have the tax code. Hey, Paul, give us an example. Like I gave you a quick spreadsheet. Why can't we show a family? And he should say, this is Armageddon, will show me. I can show him 1,000 examples in 5 minutes of how this impacts in real time without conjecture.
Maybe he just means the income of the lame establishment. Also, one thing, please back me up on this. I don't know if you will, but for anyone that doesn't believe me, with Alexandria Ocasio-Cortez, she's said she wants a 70% marginal rate for the top incomers, the tippy tops, as she calls them. Would this not necessitate, as I've stated, that other brackets would have to be shoved upwards as well, that it wouldn't just be for people that are making 10 million or more, the people that are making substantially less that are in lower brackets would also see a higher marginal rate?
Well, they have to, because even if you tax them at 100%, there's not enough money, not nearly enough money for all the programs that they're recommending. So yes, it always will trickle down. It has to. There's not enough money, and again, they don't give real numbers. Give me a real economic type of model based on real IRS information and how much money it's going to cost, and what does this 70% rate really do? Again, they never give any detail. I want to go and debate these people, and here, let's talk about the numbers, right? I can tell you how that will impact clients and the economics of the country pretty easily.
Well, I think we've got an example of the on-the-ground sort of effects of it. I mean, we can look at Venezuela, but right. That's the whole problem. And then
okay.
No, go ahead.
Unfortunately, things like raising up of a minimum wage, for example, only hurts lower income people. It's proven over and over again. It seems like a lot of the Democrats, unfortunately, they want to do things to keep people impoverished because that's a big part of their platforms, right? It seems to me that their platform is almost 80 years old. You know, that we're looking at what we want to press people. We want to grieve people. Hey, minorities were hurt in the country and women didn't have the right to vote. But the majority of them that I'm dealing with are looking at this platform and saying this is from their great grandparents' day. So I think there's a disconnect with resist and we want equality with people are, like on the street level that I'm seeing, people are finding it's odd.
Well, the old joke was, I think, the Democrats love poor people so much that they want more of them, if I remember correctly. You had various other things as well that you wanted to discuss. Because again, and for people out there, and we just passed 1,000 live viewers, by the way, so congrats to us, I suppose. And people want tax advice. You had various other things you wanted to talk about, because I'm not exactly an economics expert. So,
right. Well, we should talk about, number one, remember that these SALT deduction limitations don't impact investment properties. Okay, so if you're having a rental property somewhere on it, filing it on Schedule E, possibly, or a partnership return, there is no limit on that. That's a very big worry people have, and I'm seeing some mistakes on that. So remember that. We should talk about some of the software out there, the do-it-yourself tax software. They want you to take a picture of your W-2 and upload it to the web or the cloud. And there is no safe way to do that. Cloud storage is not safe. People are hacked all the time. I urge people to ask your tax preparer, hey, have you put my past 10 years data in the cloud? And is it still there? Because remember, that's an identity thief's dream. I have all your family's birthdays, socials, all their financial data, where they work. So imagine someone get a hold of that. So at least make sure your preparer deletes old data from cloud storage, and there is no safe place. Yeah, there's so many things to talk about.
Now, do they all use that, or is it like some tax preparers, would they just keep it locally, like they have like backup flash drives or something?
Well, right. In my office, I purposely spend a little more money on software so it's local. I can do your income taxes without ever needing the internet. It's old school. So
see, it's very funny to think of that as being old school since it still requires computing and stuff.
Right.
I'm thinking old school. I'm thinking like typewriter.
Right. Let's talk about
pen and gall ink.
Crypto is always big in the news. Let's talk about crypto reporting.
Oh, yeah.
So Coinbase, for example, everyone probably has heard of Coinbase, but they are definitely reporting 1099s to the government if you've exchanged a certain amount of dollar value. There's a lot of talk in forums I deal with that, oh, don't file your taxes. The government has no idea. But if the government is going to find out, whichever wallet you're in, no matter how you think it's hidden, you need to assume the IRS is going to find out. So if you have anyone telling you if you have gains that you really need to report, you really should do it. We do a lot of crypto work here. I'm not saying necessarily hire me, but don't turn a blind eye. If you got a 1099 from Coinbase, even if you don't have a 1099, find a preparer who can at least analyze the situation for you. Because trust me, people don't understand the thing of this about crypto is that it's not just some deduction that people might take. They might try to skirt the law, because crypto is, the government sees it as an attack. Remember, so this is not just some depreciation on a car. You know, this is something where they feel that their very base currency, their sovereign currency, might be under attack. So I want people to understand that I'm sure the IRS has a directive to see this as a national threat. So everyone should understand that the level of intense scrutiny on this for a lot of government and higher up reasons is very high, I think. Does that make sense?
Yeah. Now, let me ask this. When you go in to file your taxes, like I've for instance, disclosure here, I've received about $1,000 worth of crypto. Like at the time each piece was received, it would total around $1,000. Since I'm not going to get a form, I use Exodus. Should I simply scribble down on a piece of paper, this is how much I received, and hand that to the tax preparer to put on a separate line? Like what do you actually have to do? Whether you just tell them, hey, I made this much in cryptocurrency?
Right. Well, a lot of my business owners aren't 1099 for all their income. Like I'm not, for example, sometimes. So you have usually in software, you have a line that says, income that was received from a 1099 and income that was not. And so I simply would list that separately. Remember, in the crypto income, if you're taking it as fees or some kind of sales revenue, remember, it's not the value at the end of the year you have sitting there. It's the value at the moment that you received it for your services that we need to capture. So at that moment, that day, it could have been last June, you got, $500 worth of Bitcoin. Even if that Bitcoin now is only worth $1, that you still have $500 of income at the moment. Remember, that's a big mistake that happens. Oh, my Bitcoin went down by 80% this year, so my income from my revenue from my business is lower. No, it's not.
But it's not a complex process. You simply tell the tax preparer, the person that's preparing the taxes, hey, I need this added in. I made such and such on crypto.
Yes, definitely.
Okay, that's good to know. I thought I was going to have to file a bunch of forms or something like that. It'd be crazy. Also, interesting question. I don't know if you even would know the answer to this. Because deplatforming is so prevalent now, people create content, and credit card companies, PayPal, Patreon, everyone wants to kick them off. If somebody were to take like not cash, but if somebody received like silver from somebody, would they have to claim the value of that received silver, or does that like if you send someone a Lego set, you don't have to claim that? Would silver or gold or something like that be different, and would it extend to like copper or something?
Sure. It's however I'm paid. I could be paid in goats. I could be paid in silver.
So even that would have to be claimed. If somebody sent you a goat, how would you claim it though? Like, how would you determine the value?
I don't. We have to try. I mean, believe me, I have clients who have in-kind kind of income all the time, and we have to come up with a value. What if someone gives you a car? What if someone owed someone money and they gave them a truck
or a handful
big
of
dump
mulch.
truck? So we have to come up. There is a value there. It's not cash, but they paid their $30,000 bill with the dump truck. So isn't that worth $30,000?
Yeah, I see people in chat talking about silver goats, platinum goats. Send IRS a goat head. Yeah, see, that would be about the proper proportion, probably. I don't think they would like that very much. I can't legally recommend that. And then anything else you wanted to get into here as well, for people, especially anything that deals with self-employment, low income, anything like that. Because I mean, most people.
Well, I want to talk about, it's not about self-employment, but it's with the child tax credit rules, which have changed, which are fantastic. So way back in 2017, the old law was that if a couple had made $110,000 or more, let's say roughly, they did not get a child tax credit of $1,000 for a child, let's say under 17. And so that $110,000 level had stayed there for a long time, and it should have been increased because middle income couples make more than that. And so what Trump did is he said, well, first of all, we're going to put that up to 400,000, which is fantastic. Okay, then he also said we're going to give you $2,000 per child. So it's very important for people that have never gotten a child tax credit. They might not be thinking about it, that if you never got it before, but you're a couple making $400,000 or less and you have kids under 17, let's say, then you want to make sure that you on your tax form, you find the place to put in your child tax credit, because it's $2,000 per child.
I think he was just pandering to the Mormon vote to keep Utah myself, but
I'm not a Romney fan. But also, the other thing to talk about is unreimbursed business expenses. This is not for self-employed people, but people that have jobs, W-2 jobs, sometimes have expenses out of pocket. And there used to be a facility on Schedule A, or itemized deductions, where we could take those expenses off of our income. Now, that was removed from the tax code to simplify it. So this goes back to the beginning of our conversation, where the 1% that's hurt are these people. Like, imagine I have a Snapple dealer or a regional Snapple person making $100,000. He has about $15,000 out of pocket from travel that's not reimbursed. All right, he really brought his income down to $85,000. That's great. Now he lost all of that. So I have a memo on my blog that says if you have those, this is the one time in one area in the tax changes where you need to go and renegotiate your terms of your contract, because this is too different for them. This gentleman could have a $4,000 increase in tax and nothing he can do about it. So if you have reimbursed expenses and you're just finding this out now from me, remember, it is definitely a time to go to your boss. Hey, listen, we both need to share the burden of this, because your net income, it's a loss. It's a reduction in pay. If you think about it, right? If I have a $4,000 increase in tax and there's nothing I could do about it, hasn't my pay been reduced?
I would think that would mainly be the transportation sector probably would suffer a big hit from that one.
Salespeople on the road, salespeople who have to pay for their own expenses doing presentations. There's a lot of people out there that have this that we're not. I try to put out the word last year a lot with my podcast that you need to have a projection done. You heard me say last time, and we need a projection. And one thing too to talk about that they've been mentioning, people's refunds are going to be lower this year than last year. Well, again, that doesn't tell the whole story, because last year all the rates came down. So almost everyone got a little more money in their paycheck. And as I said when we spoke last time, hey, everyone should check, is it adequate? So I want everyone, even if your refund is lower, I want you really have to look at your total tax, right? Because your withholdings, but your total tax compared to last year as a percentage is going to go down. So remember, look at your total tax bill, not after your payments were made, to really see if Trump's tax changes has saved you money. And most of you will see that it did.
Yeah, I think so. The average person officially will pay less overall when all things are considered. I wonder if this has any effect overall on like cost of living, like the price of goods and things of that nature.
Well, that's another whole story. Is that I haven't even looked at for 2018 yet. I usually would, but after tax season. So we'll report back on how much of those tax refunds and tax reductions been eaten up in excessive costs on consumer goods, which I think is what you're talking about.
Yeah, around when would you have a better reading of that? Because we'll have to have another chat at that time. Because we've got to keep it a little bit shorter today, maybe. But I think there are still other things you wanted to get to as well.
Yeah, sure. Well, there's so many questions, that I know that a lot of them might have. So that's why people should reach out to me on the website, and I'll, even after this, broadcast, we'll try to answer them. So I'm sure, like, the first week in May, I take off a full week, and then I'll talk to you first when I get back after tax season.
All right. Well, were there any other last minute things you wanted to talk about? Oh, yeah. But again, for those that weren't here at the beginning, there is a link in the description to his new book as well. So just to make sure that people are aware of that.
Thank you very much. Be the Chocolate Milk is an excellent book for any salesperson, marketing person, any entrepreneur that really wants to understand some of the hints and tips and tricks that I've used over 30-year career as a CPA to differentiate myself in what is the most homogenous market you can imagine. I'm a CPA. I do taxes. Everyone thinks it's just a commodity. It's all the same. So if you're looking for something to read, it's very direct. It's 107 topics. And I think that someone can get something out of it, especially if you're selling something like I do.
All right. Well, it was a pleasure talking to you today, Mr. Whalen.
Thank you very much, Sticks. And I'd like to say it. Peace out. Have a great day.